Hi, good morning, good morning. Thank you guys so much for tuning into today's video. Today is January 27th, 2025, and let's take a look at the live stream, or let's take a look at the economic calendar here. For today, we have new home sales. Not really a high impactful news today, but I do want to draw your guys' attention to this really, I would say, rather large sell-off here coming into today. We had about 1,000-point move here on NQ, which is kind of insane that we moved this much points on a Monday morning on London session and Asian session. It's kind of insane to me. But yeah, my weekly objective coming into today, oh sorry, whoops. Well, if my screen would load here, it's kind of frozen. Okay, well, I just wait until it loads, but yeah, like I said, we don't really have volatility news coming into today, volatile news. No red folders, we just have this one orange folder news, new home sales. But I'm not too sure why my charts aren't loading. Let me try to reset this. Okay, there we go. Okay, so like I said, coming into this week, I was anticipating for us to take out this weekly high. So based on this weekly candle here, let's just play back just a little bit. So based on this weekly candle, once it shows up, so here, based on this weekly candle here coming into today, I was anticipating for previous week's high to be taken, right? So I wanted to see us take out this green line here. So previous week's high was my draw of liquidity coming into the week, based on how we close here on this weekly candle here, right? But as you guys saw, the way that we opened up on Sunday and in Asian session, in London session, we sold off 1,000 points. 1,000 points. And that was something that I was not anticipating, right? I was not anticipating a 1,000-point move here on NQ. Which is, I'm not too sure what could have caused that. I mean, it could have been, I mean, it's the algorithm, but like, you know, was there like any fundamental analysis that came into play? Like, was there like large news drivers? But yeah, it's kind of insane. So now that we've taken out previous week's low and we disregarded previous week's high, I have to pivot here. This is where I have to pivot because, like I said, we just disregarded this weekly bias here. So now I can't rely on the weekly time frame anymore for my higher time frame objective, right? I have to rely on daily candles once the daily candle closes, and I have to wait on, or I have to use the intraday candles such as the 4-hour, the 6-hour, the 8-hour, or the 10-hour candles to close for a higher time frame bias. But yeah, coming into today, I really don't know. Like we sold off a decent amount here, and with the way that we're looking, I'm not exactly sure what we want to do here now because we have sold off so much. So coming into this morning session, I'm going to wait until the 4-hour candle closes and this 8-hour candle closes. So depending on how we close on both of those time frames will give me a morning objective. But as of right now, if we were to close here on this 4-hour time frame, I would anticipate that we create a 4-hour fair value gap and that we rebalance this inefficiency, right? So I want to see us create this open, low, and then rebalance this 4-hour inefficiency. Once we do that, then my morning objective would be complete. But as of right now, I could see us create this 4-hour fair value gap, like I said, and for us to rebalance it. But it's a little bit too early to call that. We have about like 23 more minutes left, so I'm just gonna wait until we close there on the 4-hour candle. But yeah, that's what I have for today. Quite an interesting morning so far, right? We moved 1,000 points before we even opened up on the New York session, which is, yeah, we haven't seen that type of move in a while. I don't know, when was it this? Yeah, I don't know. This is a pretty large move, to be honest. Here, no, I do remember there was another day where we sold off like a decent amount, but yeah, I mean, I have to pivot here, right? I can't rely on that weekly time frame. And once we close on the daily candle today, I would get a new daily bias. But as of right now, this daily candle is still being formed, so I'm just gonna wait, and I would wait until it closes for me to have a daily objective or a daily bias. But as of right now, I would like to only use the intraday time frames. I can't use the weekly or the daily anymore. One thing that I was looking for on today's, I guess before the sell-off, was that this level here, the 50%, and we completely blew through that, right? We completely negated that equilibrium level, that discount level. That was something that I was looking for coming into this morning, but after I noticed that we completed the objective, there's really no point for me to take a look at that anymore. But yeah, that's pretty much all I have here for coming into this morning. And it's been quite a eventful morning, to be honest. Like, with the way that we're selling off, it's just, yeah, it's just, wow. Let's see. We could end up retracing back inside this equilibrium level 2 from this 4-hour swing high to this 4-hour swing low. That could be something that I'm gonna watch for. But yeah, one thing that I do want to draw your attention to is we do have a larger SMT here between NQ and ES. So ES has failed to take out. This low is January 14th. And yeah, ES and Q, there is a larger SMT here right now. So, I mean, if this does become, this could be a logical area for us to reverse, right? Because there's SMT. The fact that NQ had taken out January's low of day, January 14th's low of day, and NQ and ES didn't, kind of has that, there's that divergence between the indices right now. So, I mean, if we do end up reversing, this is a good area, but I don't want to call it too soon that we'll reverse just yet. I want to see how we respect these bearish SIBIs first. Let's take a look at what the dollar is doing. So the dollar, we completed the weekly objective, which was lower prices. Let's see here. Yeah, based on the weekly candle here on the dollar, I wanted to see lower prices, and we did end up completing the weekly low, or the weekly objective, and the daily objective. Well, the daily objective and the weekly objective here on the dollar were the exact same, I guess, objective, right? The daily low and the weekly low are the same, so that means we can anticipate for the weekly objective to be completed within the next day, and that is what we did. So now that we have completed the weekly objective here on the dollar, I no longer have a bias on the weekly time frame, at least, and I'm going to have to rely on the daily candles and the intraday candles for my higher time frame objective. I don't really trade the Dixie. I just use it more as a confluence of what the indices wants to do. But let's see here. I am taking a look at Tesla because I might want to buy Tesla just because it's rather bullish. Like, with the way that we're looking here, like if we take a look at the 12-month here on Tesla, this yearly fair value gap is getting respected here. So if Tesla, I feel like Tesla can make new all-time highs here, but yeah, I want to be a buyer, but I'm not exactly where I want to buy yet. So let's take a look at the 2-month time frame. 3M. Yeah, I do want to be a buyer for sure. That's something that I do want to be a part of. But that just depends on where. Like, let's see. I don't. So I don't want to see prices trade back down into here, right? That is new all-time highs as well, so this is like really I've never really dabbled upon like trading like this, to be honest, because this is more higher time frame trades, but nevertheless they're the same. Yeah, this makes sense to buy here. Okay, let's see. Let's go to that weekly time frame again. Let's take a look at the 3-week time frame. So this could be a logical area for us to buy in. Have our stop loss here. Tesla, and for higher prices like that. That's something I could see on Tesla, right? Something like this. And then you'll be making like what sounds not that bad. Oh wait, that was the, oh shoot, wait, okay, interesting. So I would have gotten stopped out there. Interesting. Yeah, I've never really dabbled with stock trading yet. I've only been a futures guy, so I'm not really too sure here. Long-term investing. Interesting. right, going back to the indices here. I don't want to take a look at the Tesla chart for too long. But yeah, going back to indices, it looks like we might not even create this 4-hour fair value gap. It looks like we might just immediate rebalance here. But yeah, we'll see, because yeah, we'll see. Very, very interesting so far. With the way that we started this morning. Let's draw up this discount level, because, or the premium. I don't want to get the premium here, just so I can see what is going on. This guy's low is 164.50. No, its low is 75. Let me go up a little bit. Okay, so that's the low. Yeah, if we do end up like having this bullish closure here on the 4-hour time frame, watch out for a retracement back inside this premium level, which is, I'm gonna denote this premium level, or not even premium level, but premium area, as a red box, right? And denote that as a green box, just so you guys can see the separation between premium and discount here based on this dealing range. So from this swing high, right, from this 4-hour swing high to this 4-hour swing low that we're most definitely going to create, there is premium and discount. Based, okay, so some characteristics of a dealing range is that the halfway of a dealing range, or like the midpoint, is called equilibrium. Equilibrium is the separator between, it separates discount and premium, right? And if we're thinking this in terms of just simple economics, right? As sellers, you want to be selling in premium. As buyers, you want to be buyers in discount. So if there are sellers here in the market right now, they're most likely going to want to sell in this red box, right? In this shaded red box here. So this red box is going to be my target if we have a bullish closure here on the 4-hour time frame. And if we close bullishly, I would target the discount level, or not the discount level, but the premium level. So into the equilibrium of this dealing range. And that is something that I'm kind of shooting for here. But yeah, I mean, who knows? We still have 10 minutes left, so we might even like retrace into this premium level before getting an opportunity to take a trade into it. But who knows? As of right now, I'm just gonna continue to wait. There's really no need for me to push anything right now, because, like I said, the fact that we moved 1,000 points in the morning session is kind of insane. Yeah, 1,010 points before the New York AM session. This is literally during the London and Asian session. I still can't grasp that. That's kind of insane. We basically reversed the entire week last week with the way that we move. In one day, we moved more points than last week. Crazy. But now it's 8:50, so I'm just going to continue to actively take a look at the charts. Let's take a look on the 15-minute time frame here. We are creating some sort of fair value gap here on the 15. Let's see if we're... So we actually had this like nice little move up here on the 15-minute, or I'm sorry, on the 1 minute. We displaced higher coming into 9:30, had this little fair value gap form, respect it, continued higher. Let's see, now 8:45, we trade back inside another fair value gap, respect it, continue higher. Alright, so yeah, I mean, like I said, coming into this morning session, gonna be actively trying to see if we can retrace back inside that premium level at least. I want this on the 15-minute time frame just so I can see what I'm working with. Okay, so there's that equilibrium level, and let me just completely shade this in. There we go. So yeah, we're still technically in discount. So that's more like that. Right, so 15-minute time frame. We could end up using this 15-minute fair value gap as an entry pattern, right? Target the premium. 162-point move. Oh my gosh, crazy. Wow. Who knows? Who knows? We could end up using this 15-minute fair value gap as an entry pattern, but we might not. Depends on how we close here on the 15. What I'm trying to say is, if this 15-minute candle here, if its closing price, so I'll indicate its closing price by this black line. If this black line ends up being above this purple line, then I would treat this fair value gap as a breakaway gap. Meaning I don't want to see prices retrace back into it. Let me make that a little bit clearer for you guys. So this fair value gap, if the black line closes above the purple line, I would treat this fair value gap as a gap that does not get rebalanced. However, if this black line closes below the purple line, so like if we close somewhere like here on this 15-minute candle, then I'll treat this fair value gap as a gap that gets rebalanced, right? That could get rebalanced. So if it closes something like this, where this black line is the closure, then I'll treat this fair value gap as like an entry pattern, where we might, you know, open up or manipulate lower, continue higher, and then yeah. But that all depends on how we close here on this 15-minute, of course. So let's see. Notice how the 15-minute high is the same high as the 30-minute high, the hourly high, and the 4-hour high. If we were to close right now, right, I would anticipate the 4-hour objective to be completed within the next 15 minutes, because the 15-minute high is the same high as the 4-hour as of right now. And yeah, so that means the 15-minute objective would be for us to expand higher too. But we'll see. We'll see. 5 minutes left until we open up here. I do want to have my trading journal just opened up here before we start. Oh yeah, and let me log into my trading account as well. My funded futures. Alright, got that. There you go. 4 more minutes left. Pretty interesting so far. Let's see. Dun, 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 Yeah, 15-minute high appears to be the same, is, and not even appears, is the same high as the 30-minute high, 1 hour high, and the 4 hour high. That idea is called scoping, by the way. Scoping allows you to understand when prices should complete an objective. So like this 4 hour higher time frame objective here is for us to possibly rebalance this 4 hour inefficiency that we could create, and also to retrace into the premium level of the 4 hour dealing range, like I said before. And the ideas of scope is that because the 15-minute high right now is the same high as the 4 hour high, I wanna see us complete the 4 hour objective within the next 15 minutes as of right now. But yeah, 2 more minutes left. Continue to practice patience. I don't notice how on every single time I've done live stream so far, I've never taken a trade before the first 30 minutes, right? Before the 10 o'clock opening bell. That's just a rule of mine where I just don't like trading like that. I would rather wait until the first initial 30 minutes passes first, and then possibly look for some sort of entry, you know? But as of right now, there's really no point in us trying to force anything. I'd rather choose to be safe than sorry. In this conditions, at least. One minute left, minute 30 till the closure. We're going to create this tiny 4 hour fair value gap. Hourly time frame. Probably going to Interesting. 8 hour high is different from 4 hour high, meaning we could actually end up expanding towards the 8 hour high with the 15-minute or with the 4 hour model. Let's see, does the 15-minute time frame have, is there an entry pattern for here? No entry pattern. This is really, see, so if I'm going to try to take a trade here based on the 15-minute model, there's not a time frame I can use for an entry pattern, at least on the sub 5-minute time frames, right? So the 5-minute doesn't have a fair value gap, 4-minute doesn't have a fair value gap, 3-minute doesn't have a fair value gap, 2-minute does not have a fair value gap, and 1-minute does not have a fair value gap. With that, that is the opening bell, right? So, like I said before, notice how we closed here. The way that we close on this 15-minute candle, its closing price is above the previous candle's high. So that purple line is above the blue line, which means that I have to treat this fair value gap here on the 15-minute time frame as a breakaway gap. I don't want to see prices like create this open, manipulate like this low. That's something that I would not be anticipating that. I would anticipate for us to open, manipulate maybe here, and then take out the 15-minute objective. After we take out the 15 objective, we could, if we end up rebalancing it, then that's fine, because I no longer have an objective here once we complete the 15-minute, or once we take out the 15-minute high. But yeah, another thing is, so we did create that 4 hour fair value gap, right? This is a gap that could be rebalanced. Just based on how we closed here, I want to see prices rebalance this inefficiency. And also notice how the 15-minute high is the same high as the 30-minute, 30-minute, hourly, 4 hour. That means I want to see us complete this 4 hour objective within the next 15 minutes. That's my, like, that's what I'm anticipating. But we'll see. Oh yeah. There's no trades right now. I don't have an entry pattern. Like, I know what I have an idea of what my higher time frame is going to be, my higher time frame objective. It's just there is a model, but there's no entry pattern. Like I showed you guys, there was no fair value gaps that I could have used there. And notice how I can't use this 15-minute fair value gap because it's to be treated as a breakaway gap, meaning I don't want to see prices trade into it. I want to see prices treated like a breakaway gap, like break away from it, not even touch it. And now that I'm finished with that, I do want to go over the pros and cons with you guys here from last week. So last week, there was about like 4 trades that I reviewed, and every single one of those trades, there was a higher time frame objective, right? There was a model and there's an entry pattern. The fact that I'm able to have consistency between all of those models or all of those trades is like very crucial. It matters a lot to me about the consistency, right? For me to be able to identify and explain to anybody if they ask me, hey dude, what's the reason why you took this trade? I can explain that to them with three reasons, right? Hey man, this is my higher time frame objective for this trade. This is my model, and this is the reason why I entered it, or this is the way I entered it, that being the entry pattern. And yeah, that just like, if I'm able to explain those requirements in every single trade, that just enforces the idea of consistency, consistent, right? It's not about that one trade that's gonna bring you like whatever, right? It's about consistency. Second, there was a trade last week where all of the things met, right? The higher time frame objective, model, entry pattern. But when I was preparing to take it, right, NQ had not take out its model's low. So I can't really explain this to you guys just with words because you have to see this with a visual representation. But ES had already taken out its 15-minute low and NQ did not. So that means there's a divergence between the indices. There's SMT. I don't want to be a part of I don't want to be in conditions where there's SMT, so I just close my trades, and I have to accept the fact that even though, like I said, my higher time frame objective has been met, my model has been met, there's an entry pattern. If there's SMT between the markets, between NQ and ES, I just can't. The probability of the trade playing out is like lower there because I could have been a part of the manipulation move, right? And I don't want to be a part of that. So I just closed my trades, moved my stops to break even, and bam. Pretty well executed, to be honest. The way that I did things, very, very well executed. And that just practice discipline, right? No matter how good a trade looks, it's not guaranteed. Nothing's guaranteed here. So me being able to practice discipline and following my strategy to its complete core is very crucial to me. Third thing here, being able to distinguish the importance of time frame alignment, right? So the idea is that, like, here in I can't show you, there's not a representation yet, but the lower time frames has to tell the same story as the higher time frames, right? So let's say that, there's a good reason here, or a good explanation. So let's take a look at it on the daily and the weekly time frame. So here on the weekly time frame, I'm anticipating higher prices, right? This is my higher time frame objective, or higher time frame order flow. So higher time frame is telling us higher prices. What's the lower time frame is telling us? this daily candle is telling us that we're most likely going to take out this candle's low or rebalance this inefficiency. So daily, lower prices. Weekly, higher prices. It's not aligned, right? You have to wait until the lower time frames are in alignment with the higher time frames. And that's going to allow you to distinguish between a good model and a bad model, or a bad trade and a good trade, right? So I was able to, kind of see which, I can identify, okay, if there's misalignment between the time frames. If there is alignment, then I'll take it, or I'll take the trade. But if there is not, then I simply just sit on my hands, right? And that's just something that I was able to do last week that I want to applaud myself for. Some things I can work on are, there was a trade last week specifically on, was it the 20th? It was on the 20th, where the model was there, higher time frame objective was there, entry pattern was there, there was an SMT, and I hesitated to take the model, but I eventually took it because prices gave a second chance to. But yeah, I shouldn't be hesitating. There's no reason for me to hesitate when every single thing that is supposed to be met got met. I should be able to just click the button, right? And that just shows you that I'm lacking in some confidence in my model. But this week, coming into this week, I'm going to improve on that, and I'm going to be able to take anything or any trade that I see that meets all of the requirements that I'm looking for. Here's the quote: in life, if you aren't willing to risk anything, you will not succeed. Everything comes with a risk, right? And you just have to be able to manage risk properly. And if you're not able to, if you're not even willing to risk anything at all, then you're just gonna stay in one place your entire life. Not trying to put that in a bad light, but yeah. Second thing here, practice mindfulness. The whole idea of practicing mindfulness this isn't even applied to trading. This is like a life thing, right? You're gonna have to practice this throughout your life, through every single discipline of your life, not just trading. And the whole idea is, you gotta ask yourself, is what you're currently doing going to benefit you in any way, right? Is you playing a game, like when I was a kid, like, is you playing League of Legends going to benefit you in any single way? And back then I just played to play. There was no, I played to get better, but yeah. But now, like, as I'm growing, as I'm maturing, there's only a limited amount of energy and a limited amount of time in a day, and how do I want to spend that time, right? Am I going to spend that time doing things that aren't even in alignment with my goals? Or should I be spending my energy and my time, right, into something that I do see myself doing in the future? So just have that in the back of your mind. Have that actually consciously think about it, right? Is your thoughts and your actions in alignment with your goals and your values? Some improvements here. Continue to take consistent models. Every single model or every single trade that you take should have a higher time frame objective. There should be a model and there should be an entry pattern. Don't be hesitant of the outcome, right? The outcome is something that's not in your control. That's up to the algorithm. So there's no need for you to be worried about whether you're going to experience a losing trade or a learning trade. That's a winning trade or losing trade. That's something that's completely out of your control. What is in your control, however, is how you execute and how you view prices. Failure to execute is accepting to fail. Is something that's a quote that I came up with. I don't think I've seen someone with that quote yet, so I'm gonna patent it. make that the Thanh Cao quote. Second improvement here is pay close attention to SMT. Like I said, no matter how good a trade looks, if there's SMT between the markets, then you simply just can't take it, right? Here on ES right now, on ES we rebalanced this inefficiency. NQ we did not. So there's I guess a 15-minute SMT right now between the markets, but we could end up rebalancing this inefficiency too on NQ, but that depends on how we close here. But yeah, continue to pay attention to SMT. No matter how good a trade looks, if there's SMT, the probabilities just becomes lower, right? It isn't a reasonable trade anymore if there's SMT. Third, maintain a level of awareness over your thoughts and your actions. You're in control of yourself. You're responsible. And if you're responsible, you are in control. Everything you do should be in accordance with your values and goals. And how do you view your, close your eyes and try to imagine who you are in the future, right? What are the actions that your future self will be doing? What are some of his accomplishments or her accomplishments? Once you have a pretty good idea of what your future self is, now think back to the present. Would the future you be doing this action or have this thought, right? That's just something that you just practicing awareness. And last thing is aggressive trading. Yeah. Going back to the charts. So, with that basically completes the pros and cons for me. And this is like just me reviewing, right? With the journals and with everything that you do in journals. So you should be able to review it. You should actually review your journals. Not only should you be journaling, but you should be able to review your journals, and it just reinforces the ideas that you wrote, and it just allows you to have a time to reflect, right? But yeah, going back to the actual charts here for right now, we're about to close here on the 15-minute candle in about 40 seconds, and let's go back to the theory. So this is the second fair value gap candle's high, right? Let me make that a red line. And notice where we are about to close. If we close above, if the purple line is below the red line, what can we treat this 15-minute fair value gap as? A gap that gets rebalanced, right? So it's now reasonable for us to rebalance this inefficiency. So this is something that could possibly play out, right? So this is where we actually close. Purple line is below the red line. So now this fair value gap, it's reasonable for us to rebalance this inefficiency now. So, and we should respect this inefficiency here, this 15-minute fair value gap, if we're going to respect the hourly order flow, 4-hour order flow, and a 30-minute order flow. So that's what I do have here for the next 15 minutes at least. I want to see us, if we do end up trading back inside this inefficiency, I do want to see us respect it and create a bullish closure here. But yeah, that's kind of what I have here for the next 15 minutes. The last thing I do want to go over is one trade here from last week. Or actually, I'll go over two. So starting with the first one, I based my higher time frame objective here on the 2-day candle, right? So with the way that we close here on this 2-day candle, right, I can anticipate for us to take out this 2-day candle's high. And so I want to see higher prices, right, in the next 2 days. So with that in mind, I'm going on to the daily time frame, right? So the 2-day high is different from previous day high. So notice how we closed here on this daily candle. This daily candle is suggesting to me that we're most likely going to take out previous day high and possibly expand higher towards the 2-day high. So the daily time frame is in alignment with the 2-day time frame. So let me say that again. The daily time frame is now in alignment with the 2-day time frame. So lower time frames is in alignment with higher time frames. And one thing that I do want to mention here too is the 4-hour high. This is a 4-hour candle, right? This 4-hour high is the same high as the daily high. That's telling me that, hey, we're most likely going to complete this daily objective within the next 4 hours. And that idea stems from scoping. So now going from the 4-hour time frame, I'm going to go onto the 1-hour time frame for an entry pattern, some sort of fair value gap. And on the 1-hour time frame, there's this 1-hour fair value gap, and once we trade back inside this 1-hour fair value gap, I take my entry. My targets are the daily high, and we should expand higher after taking out the daily high to attack the 2-day high, because like I said, the daily time frame is in alignment with the 2-day time frame. So that's essentially my first trade of, the first trade of January 25th. And then coming into the morning of January 25th was this. So after we complete the daily objective here, so this is that daily candle. So we took out its high, right? So I no longer can use the daily time frame as my, I can't use it as a higher time frame bias anymore. So I have to use the intraday time frame, such as the 4-hour, the 6-hour, the 8-hour, or the 10-hour, right? So we took out the daily high, and after we took out the daily high, we didn't take out the 2-day high, and we kind of like had a reversal almost. We retraced back inside the range. So this 4-hour low and this 4-hour high, there is a dealing range. And like I said, what are some characteristics of a dealing range? Premium and discount in the equilibrium level, right? So if we begin to sell off or retrace back inside the range, as buyers, where do you want to be a buyer at? In the discount of the range, right? Below the 0.5 level. So my higher time frame objective here for this trade is for us to retrace back inside the 4-hour dealing ranges discount level. So that's my higher time frame objective. How I'm going to align myself with that higher time frame objective is based on the 1-hour time frame. And this 1-hour candle here is suggesting to me that, hey, we're most likely going to take out this hourly low. But when I go onto the 15-minute time frame, I notice, hey, this 15-minute low is different from this hourly low. But the 15-minute low is suggesting the same idea, lower prices, right? So now it gets a little tricky. There is a model within a model, right? There's the hourly candlestick was my initial model, but as I went onto the 15-minute time frames, the hourly time frame becomes my higher time frame objective, right? Because why did that happen? Because the 15-minute low isn't the same low as the hourly low. So now it becomes a discount model. Initially it was a discount model, but as I went onto the 15-minute time frame, it became an expansion model, because we should expand lower to attack the 1-hour low after taking out the 15-minute low. And why should we continue lower after taking out the hourly low? To retrace into the discount level of the 4-hour dealing range. So there's like layers to this trade. This is the first time I've ever seen this happen. But yeah. So now my model is based on the 15-minute time frame. So from the 50-minute time frame as my model, I have to go on to the sub 5-minute time frames for an entry pattern, right? And on the 1-minute time frame, there's this 1-minute fair value gap that should be respected if we're going to be in accordance with the 15-minute order flow and the 1-hour order flow. So here we are. We trade into that 1-minute fair value gap, and then we take out the 15-minute low. But we failed to take out the hourly low before getting stopped out. So we take out the 15-minute low. I've moved my stops to break even, and then after taking out the 15-minute low, I get stopped out. But I don't have a picture of the outcome of this, but we do end up actually taking out the hourly low and then taking out the we do end up taking out the hourly low and retracing into the discount level. But I just don't have that on the review here. But yeah, that basically wraps it up for me for today. Like I said, this fair value gap could now be rebalanced, which we do end up doing. We rebalanced it. So now it's just up to prices, right? I want to see us respect this inefficiency, and I want to see us go for higher prices. Let's see if we retrace into the discount. So we didn't retrace into the discount of this dealing range. Interesting. But yeah, that's gonna be all for me for today. Don't really have anything else to go over. But yeah, thank you guys so much for tuning in. Tomorrow, tomorrow I'm probably going to be live streaming on this YouTube channel. It's my new one, just because as I'm trying to like advertise my videos and stuff, I for some reason got banned. I actually don't know why I got banned. Is the content I'm creating like something that's bannable? But yeah, I'll be live streaming here on this channel next time at Thanh Cao 1 and Forge. But yeah, thank you guys so much for tuning into today's video.